This video is a complete guide on how to trade Volatility 75 index. So in the next 5 to 10 minutes, you are going to understand what Volatility 75 index is all about, how to calculate your stop losses when trading Volatility 75 index, and most importantly, I'm going to show you a simple strategy that I've been using that you can use to make over hundreds or thousands of dollars every week in the market trading Volatility 75 index. So I will see you after the disclaimer. So let's start off by answering what is Volatility 75 index. Volatility 75 index is an index that is provided by Deriv in their simulated synthetic indices markets. So Deriv have got these synthetic indices that mimic real world markets, and these indices are not controlled or are not affected by news or volume or whatever. These indices are computer generated, so you can trade them based on technical analysis only. So Volatility 75 index is one of these indices, and it's one of the traders' favorites. Why? Because I think there's two reasons for that. Number one, Volatility 75 index allows you to use a very small lot size of about 0.001, which is the nano lot. You have the smallest margin, which means if you are trading based on Volatility 75 index, you can trade it with less than $5 or even $1 in your account. But there is one thing that most traders don't know what to do when they trade Volatility 75 index, which is to calculate your stop losses and take profits. Most traders just go into the market and they place their trade, but they don't know how much are they risking per each and every trade. So to do that, I'm going to show you a very simple way today. For you to do position sizing when trading Volatility 75 index, it's very simple. When you are trading currencies, you want to know the amount of pips that is from your entry to where you want to put your stop losses. But when you are trading Volatility 75 indices or other synthetic indices, you are not using pips here, you are just using points. So all you need to do is calculate the points from your entry to where you want to put your stop losses, and then you multiply that by your lot sizes, right? And it's very easy. Let me show you how to do that. So let's say right on this market, I want to buy here where the buy trade is, and I want to put my stop loss below this zone, which is right here. What I just do here is we will just go ahead and grab this crosshair too here. Once I grab this crosshair too, I want to measure how many points are there from my entry to my stop losses. So to measure that, I'm gonna click that and I'm gonna drag it to where my stop loss is. So if I click here and if I drag down to this zone, you can see that from my entry point to where my line is, where I want to put my stop loss, my number of points is 1,743 points, right? So for me to know how much money is this in dollars, the only thing that I need to do is multiply this 1,743 by my lot sizes. So if I use this lot sizes right here, which is 0.001 multiplied by 1,743, I'm going to get a total of $1.74. So if I had to enter the smallest lot size here and put my stop loss here, the amount of money that I'm risking here is $1.74. The same thing goes for the take profit, but in this case you can see, if I know exactly how much money is this, I can trade any account size, because if I have $10, I can put the smallest lot size, and this big move right here can be worth $1.74. Now, let me go ahead and give you a very simple strategy that I've been using to trade Volatility 75. And I promise you, if you use this strategy correctly, I've backtested it and I've been trading it, you can make hundreds or thousands of dollars. Of course, results are not typical, but if you do the same thing that I'm going to show you here, you are going to make a lot of money in the market. Since Volatility 75 index is very volatile, we don't want to be using trend reversal strategies that we have been using on other markets. In this case, we just want to catch an existing move and then we want to follow it, right? So we will use two indicators, the one for trend identification and the other one for entries. The first indicator that we are going to use is the RSI right here, and the RSI indicator is going to help us to detect the trend. And I'd be thinking, okay, does the RSI shows you the trend or whatever? The RSI can show you a trend, but in a way of saying, if the market is overbought, am I going to reverse that market, or am I going to oppose that market? Definitely you don't want to oppose that market. Why? Because for the market to go overboard, it simply means there is more buying pressure, more people are buying, and the trend is going stronger and stronger and stronger. And if the market is going oversold, it means sellers are getting more control and the market is going into a downtrend, and the downtrend might continue. So what you're going to do here is you're going to put the RSI on the charts, and for the zones of the RSI you're going to use period 14, and you're going to use levels 50 and 50. We don't use the 90, 10 or 20, 80 or the 37. We are going to use level 50 and 50, and the reason why we are going to use this is because we want to catch a strong trend. The way that we catch a strong trend here is to say, if the market or if the RSI is crossing above the 50 zone right here, the market is likely in an uptrend, right? If the RSI is going below the level 50, it means the market is going into a strong downtrend. So here's how we get our buy trades. So the buy trades that we get here is we want to look into this market and we want to wait for the RSI to cross above the level 50. For us to buy in this zone, we want another confirmation, and the confirmation that we are going to use here is the very simple 21 EMA here. If I go to my indicators and if I go to my moving average, you are going to see this is period 21, this is 2 pixels, and I'm gonna apply, this is simple moving average. You can change this to exponential, but it's the same. So here we are going to use the symbol or the exponential moving average. So what we want to do here is we want to wait for the RSI to go and cross above the level 50. So if the RSI goes and crosses above the level 50, the next thing we are looking at our actual market. If our actual market also goes ahead and crosses above the level 21 moving average, that simply means we are going into a strong buy position. So in this case, you can see I bought right here after the RSI crosses the level 50, and also you can see that the market crosses above the 21 period moving average, and then you buy there. Your stop loss needs to be below this 21 period moving average. So for the stop loss, I'll just take this stop loss button here, I'll just drag it below the, and then I'm gonna go ahead and modify this position. So the take profit here is not complicated. What you do for the take profit is you just want to do 2 times the risk. If you are risking $1.74, as I said here, I'm just gonna need to make about $4 in profits because I want 2 times the risk or 3 times the risk. As you can see from this trade, after this crossover, the RSI and the market crossing the 21 period EMA, there is more chances that the market will go up for a very long period of time. So you can do 2 times the risk, 3 times the risk, or sometimes you can do 4 times your risk, right? So let me show you more examples of how this trade, how you would get more trades with this strategy. Here you can see that the RSI crosses below the level 50. The RSI crosses below the level 50 right here. The market was going into a sell trade, right? And also want to confirm by seeing the market going and closing below the 21 EMA, which happens right around this zone right here, which is exactly where you were going to sell at this point. And after that, you can see that the market went on to move lower and lower and lower, right? So you just want to wait for the RSI to cross above the level 50. Once the RSI crosses above the level 50, you want to look for buy trades. But before you buy here, once you see this crossover, you want to also wait for the market to cross above the 21 EMA. And if that happens, you can place a high probability trade, and then you buy, and then you expect to make money trading this Volatility 75 index. If you want to get a step-by-step guide on how to trade this strategy, I have made a full article on our website, tradingwithtan.net. You can go ahead and check out that article. I will leave the link in the description below. You are going to see a lot of examples, and you are going to see also step-by-step how to insert these indicators and how to trade this strategy. So this strategy was on a 5-minute time frame, but you can use any time frame that you want, I guess, and you can test it before you start using it. But so far I've been using this strategy and it has been profitable for me. So make sure you don't fall behind. Just go and try this strategy and see what happens. If you want to learn how to grow a small account, check out our small ebook that is popping up on the screen. That is going to give you a step-by-step guide, a blueprint of what you need to do to trade a small account. This book is filled with strategies and tactics. Go ahead and check it out, and it's almost free. I will leave the link in the description also. So I will see you in the next video.